This after take counting.
No.
I'm burning it now.
Where are the others? We are waiting for you guys, please. I'm sure some are having network issues. Right? Right? You are joining. All right. We are expecting two more. Right? Oh, good. We are expecting one more, and then all over the world is something certain. Oh, okay. I think let's continue because it seems the other person is nowhere to be found. Okay, so I'm sure she will join us eventually. So, guys, so what I was explaining to us is the reason why those artificial intelligence that are programmed, okay, now, is the reason why they become better traders than us. You understand? So now, if you learn to read this market, now you can learn to understand these structures, what we are learning tonight. Now, this is what would make you a trader. You understand? Now, this talk is not as easy as we think. Myself, I'm still learning this market structure still now. I told you guys I'm doing some courses. You understand? I have an archive of a course, okay? I think I showed you guys then. You understand, of over 111 courses. I'm not doing all at a time, but I'm doing the relevant ones. Okay. So these structures is not as easy as some of us. I know some of us who already had some part of the training, like market structures. I know it now. It's not as easy as that. That is why sometimes when you think a structure has broken, you take a trade and you'll be surprised that it will start going against it. Like, and you'd be like, these market structures, say it broke now, say it didn't break now. Yourself, you'll be debating. You understand? So now, guys, when reading these market structures, I just, without much grammar, now I just want to present to us how the market is read. You understand? How you will know what the market is doing, how you will know where the market is going and what is, you understand? Now, now there are two, okay, Madam Toyi has just joined us. You're welcome.
Yeah.
We waited for you actually.
Good evening.
Good evening. Welcome.
That's one thing. Thank you.
Well done, ma. Nice to have you on the wedding.
Thank you so much. It's
You
been a
know,
while.
you know, honestly, you know, you are special in our midst, though. It's not easy to find a female trader. All right. So now,
It's been a while.
yes, ma. It's been a while. I'm sorry for the break and you know. So we actually had some issues with and but thank God it's resolved now.
No problem.
Yeah. So like what we're discussing before you came is how to understand the market. How do you read this market? If you can understand this, you'll be what will differentiate you from every other persons out there. You understand? This is what will differentiate you from every other traders out there. How do I read this market? When I see a currency pair, how do I know what it wants to do? Should I be buying? Should I be selling? You understand? This topic we are treating is what would answer it. Now, guys, like I defined market structures. Market structures is the studies of the trend of the market. Remember, I told you that this market is an organized system. Okay, it's an organized system. You understand? It's an organized system, and within these systems are structures. Now, there are two types of structures. Now, one, there is bullish structures, and two, there is bearish structures. Okay. Now, how do I know? Now, remember from our basic training, okay, so we already understand when we say bullish, we know that it means it's going up. Like when we say bullish, it means something that is going up, okay? And when we say bearish, it means a falling market, you understand, or a market whose price is selling, you understand, okay, or whose weight is selling, okay. Now, or you can call it bullish trend and bearish trend, you understand, okay. But the professional language for it is structures, you understand. So how do you know when the market is going up, you understand, and how do you know when the market is coming down, you understand? Because these things, I know for a new trader, when you look at the chart, it's too overwhelming. Like, you're like, what is happening? Like, where the market, where is it going? What is it going to do now? Many of those questions, okay? Now, for a bullish structures, okay, now, we must understand that in the case of a bullish structures, okay, now, the market would be showing us, it would be showing us some signs, okay? So which means in a bullish structures, we'll see the market making higher highs, now higher highs and higher lows, okay? So which is a H and okay, HL, you understand? Meanwhile, in a bearish structures, we would see the market making lower highs, okay, lower highs and lower lows. I remember when I was learning this stuff, I used to confuse them, like which one is, you know, these higher highs and higher lows and lows and lower highs. Like, I used to confuse them with the others, like, okay, which one is higher highs, which one is lower lows, which one is, and all those stuff, you understand? So it's very, very simple, okay? So that's why I'm trying as much as possible to avoid much grammars, you understand? This thing is very simple. The aim of this teaching is understanding, okay? So beyond every grammar and everything we are saying, you should understand the concept, the layout we are trying to build, okay? So which means whenever you see the market making this, now, if you see the market ever making a higher high and higher low, the structure of that market is bullish, you understand? So which means in this market, what you should be expecting to do only is to buy, you understand? Whenever you see the market making this, okay, making this stuff, okay, now you should be thinking what should be at the back of your mind should be to buy. And whenever you see the market doing this, what should be at the back of your mind should be to sell, you understand? Now, I know many of us are thinking now, like, wow, so is this so simple? Like when I see this, I buy. When I see this one downward, I sell. It's not as simple as that, guys. You understand? Remember, this is just the kindergarten of market structures we are dealing with. Now, it will shock some of us who know structures already. They say structures I'm learning now. It's far way advanced than anything that any of us have learned about structures. So when I'm done learning it and I apply it, you understand, I will now find a way of simplifying it, breaking it down for us that would understand. You understand? Because even myself, like, is a kind of difficult to understand now. Okay, so I'm trying to figure it out. I'm learning it along with my boss. Promise. You understand? So structures is beyond what many of us is thinking now in our head. Though for those of us who know structures already. So that is why in this batch of the training, I want us to let go of like everything we've known. You understand? Because to be true, to be truthful with us, some of these things we've been learning, like the simplicity with which we would be learning this stuff, we haven't had them in that way in the past. Okay, so it would benefit us if we can unlearn some of the things we've learned already. And then, you know, one of us contacted me like, okay, I went on YouTube looking for this thing on market structures. You won't see it on YouTube. There are only 2 videos on market structures on YouTube, and they are nonsense. Like, you would end up confusing yourself. So I usually advise my students, if I teach you anything and you go to YouTube thinking you can find it, you won't find it here. Remember, I told you guys that I paid much money to learn this. So if those kind of stuff on YouTube and you think I didn't just go there to just find them. So if after this lecture, you now go on YouTube now saying, okay, and what is this and that and that, now you'll be hearing different, you will end up confusing yourself, guys. Okay. Now, how do we now know what these higher highs and higher lows now that is responsible for a bullish market? Now, how do we now know when this is happening? You understand? How does these higher highs and higher lows look like? And this, and for a bearish trend market, for a bearish bias, like when the market is coming down, like these lower highs and lower lows, how do they look like? What does it like? So let's have a picture of it. Okay, so let me clean some of this stuff now. Okay, so I will clear out this drawing now, guys. In a bullish market, now we must always remember this. Now, in a bullish market, we always have, okay, a high and a low. Okay, now there is something called retracement. So what is I think I will define these terms in the basics. Now, retracement is when you see the market moving in a particular direction and boom, it pulls back, like it takes the opposite direction for a while. You understand? Before continuing. Okay, so that is what is retracement. We call it pullback. Okay, so it means this market is like a rubber band man. Okay, like I want you to see price as this guy, like there is a rubber ring on his waist. Okay, so which means this rubber band man, no matter how he runs, okay, he would always pull back. You understand? So it means whenever you stretch it, it can't hold itself here forever. Okay, it will always okay, it will always come back. Okay, now, so which means this rubber band man, so when it moves, it rests. When it moves, it rests. When it moves, it rests. Okay, are we getting it? Now, so this price in a bullish market, okay, now in a bullish market, so we always have a high, okay? This is a high, okay? And then a low. You understand? We always have a low, okay? And guys, a low is confirmed as soon as the market, after resting, let's say the market is going up, then boom, it pulled back, okay? And then, so how do we know when this low would be confirmed? Now, this particular low, okay, would be confirmed as soon as we have the high of this level breached. You understand? As soon as market breaks this high, okay? So, which means this low, okay, we can have it come all the way here, okay? So, but if we don't have a break of this high yet, we cannot classify this low as a low. So, but as soon as we have the market do this, so we can see this as our low, okay? Now, is everyone with me to this point? Is anyone confused? Are we with me?
Yes.
Okay, now, so we can see this as our low. Then, now, we would, after this low, in a bullish market, we expect the market to make a high. Okay, I hope everyone is with me. So now, this is our formal, this is our recent high, okay, and this is our low. Okay, and the reason why this low is, we call this place a low, is because after this market was originally moving in this direction, and then this rubber band man, it was tired, so it had to rest. So after it rested, now this rubber band man is now targeting, like, this is the miles it wants to go. But in his mind now, the rubber band man is saying, this is the highest I've gone. I think this time around, let me try to achieve more than what I've done in the past, okay? So this rubber band man, this was his highest milestone so far. So this time around, the rubber band man, he resumed his movement again, and boom, he's happy this time around. Like, this was his formal milestone. But this time around, the rubber band man has broken his past record. You understand? So which means this place was the highest he did, but now he has a new record. He has a higher record. Okay, so it means we have a new high. Okay, so this rubber band man, after breaking this former milestone, okay, he now says to himself, I'm tired. Let me just rest a bit. So he comes back again, and then he now says to himself, this was the formal, just the same way he did here. This was the formal milestone, okay? So let me see if I can break the status quo. Then the rubber band man, he begins his journey again. He resumes, and boom, he started going. He started going, and boom, he achieved another milestone. Like, he's happy. Like, I keep on breaking the milestones. Now, guys, this is how the price moves. So you must always see the price as a rubber band man. When you stretch a rubber band, it must always come back. You understand? So when you stretch it, it would come back to, you know, it will lose its strength. So now it's the same thing with this price. So now this place is called a high. This is a low. You understand? Remember, as at the time that this rubber band man was here, this was our low. But now, if you look at this low now, did you now discover that this low, okay, is now lower, is now higher than this low? look at the point which they are. Now, this low is lower than this, okay? And this particular low is higher than this. So we can call this one a higher low because it's where it is higher than this one, okay? And if you look at this high, this new milestone that this rubber band man has achieved is higher than the former one. So we can call it a higher high, okay? Is anyone confused? I hope all of us we understood to this point.
Yes.
I want to have all our answers, please.
Yes, sir.
All right. Madam Toyin, hope you are running with us. Okay. Hello, is Miss Toyin with us? Well, all right. So let's continue. Now,
She has been muted already. That's why you can't hear her.
okay, okay. So now, so guys, so in a bullish market, this is how the price moves. So it means we would be seeing price do something like this. We would be seeing it making something like this. So which means we have this place as our, where is this stuff? We have here as our high, okay? We would have here as our low, okay? But now, if you look at this new high, it's higher than the former one. So we call it our higher high, okay? We call it our higher high. Now, if you look at this new low, now you can see that where it is higher, is a low, but is higher than the former low. So we call it our higher low, okay? So higher low, okay? So now if you look at this new high now, is higher than the former one. So we call it our higher high. Now, if you look at this one, is now this low, okay, is higher than the former low. So we call it our higher low. You understand? So it keeps going on and on and on until the trend changes. Now, our responsibility now is not to know how the trend changes, okay? So we will come to that. We will come to structures validations, okay? So now, this is how you recognize a market that is trending upward, okay? Now, what of a bearish market? What if this market, this rubber band man, what if in the case that he's descending down? So how does he behave? How does he look like? Let's look at the behavior of Mr. Rubber Band Man. Now, okay, oh, can I undo? Yeah, all right. Now, in a case where Mr. Rubber Band Man is coming downward, okay, so which means he's losing strength. He keeps losing strength and losing strength and losing strength. Now, so let's see how he behaves. Okay, so now this was, let's say this was the highest point, okay, that Mr. Rubber Band Man had reached, okay? So let's say it was coming like this, and this was the highest point. Then all of a sudden, Mr. Rubber Band Man now did this, okay? Now, he came down, then he gathered strength a little. He attempted going up, but it wasn't possible, okay? So he was overpowered, and then boom, he lose strength again. Now, this time around, Mr. Rubber Band Man, this was the formal point he reached. This was where he fell to. From that point, he was like, man, I can't remain at this level. So let me gather strength and see whether I can challenge to go back to where I'm coming from. So let me rise to my former position. And then he tried going up. So, but he discovered that he didn't have enough strength. So, boom, he fell again. And his fall this time around is even critical. So he fell below his former point. And he's wondering, okay, this time around, he says, let me go up again. and then he went up. Then this is the level that Mr. Rubber Band Man is trying to challenge, he's trying to reach. You understand? But he couldn't have enough strength to reach this level. And then I know for Mr. Rubber Band Man, he's thinking, let's see if I can go back to this place again. And then let's say, boom, he reached here. This is where he's aiming, but he loses strength again. And boom, this time around, he kept on dragging himself, but he found himself falling below this lower point. You understand? So now, this is in a downward trend. This is how the price behaves. So which means now we have this place as a low, we have this place as a high. You understand? But now we have another low that is lower than this former low. So we call it lower low. It means it's lower than the previous low. Then if we now look at this high, this point where Mr. Rubber Band Man tried to challenge, now is still lower than the former high, than the previous high. So we call it lower high. So it means this high, it's a high, but it's lower than the previous one. Then let's say Mr. Rubber Band Man, he now attempted to go up again. He wants to challenge this level or any of these level upward. He's thinking, man, I have fallen, I have crashed so much. So let me go back. Let me retain my glory. Let me retain where I was coming from. So all the things they've taken from me, let me see if I can gather strength and challenge them. Then Mr. Rubber Band Man began to go up, and he was clapping for himself. And then he found out that he couldn't move beyond this level. And boom, he crashed downward again. You understand? So at this point, now, this was the highest that Mr. Rubber Band Man was able to attain before he crashed downward. So we call it a lower high. So which means this high is lower than the previous level where the Mr. Rubber Band Man fell from. Now, then, if you now look at this particular low, you discover that it's lower than the previous low. So we call it a lower low. Okay, so whenever you see price doing this, always, you see, guys, this thing is simple. It's complex actually, but if you can just understand price with this simplicity, like you will discover that the market, like, is as simple as what you can imagine. You understand? So whenever you see price, I want you to see price like a Rubber Band Man. You understand? Because everything you are trading on the chart is actually human emotions, human decisions. You understand? You are reading the decisions that other human beings like you are making on the chart. Okay? So now, and for professionals, this is what they see. This is how they read the market. You understand? So I want you to see price as the Rubber Band Man. Okay? This is the rubber band. Okay? This is the rubber band. And this is the Rubber Band Man. Like, he's in between, you know, he's in between this price. Okay? So whenever he tries to move, this rubber band is always on his waist. You understand? So whenever he tries to move, so, you know, no matter how long he stretches, this rubber band would still pull back. You understand? So which means the market always moves, pulls back, moves, pulls back, moves, pulls back. Okay? So which means in a bearish structure, the market always makes a lower low and a lower high. Okay, it always makes a lower low and a lower high. So this is how you know the intention of the market. This is how you read the intention of the market. You understand? So now, in this case now, I think this is all. I know many of you in your mind, you are like, show us how this thing works on the chart. I can't wait to understand this thing. Guys, wait, don't worry, we'll get there. Okay, so this is all I just want you to understand tonight. So when you get home now, sorry, I was talking as if we are in a classroom. Okay, so after these lectures now I want you to carry your biro and your paper, okay, and begin to imagine how Mr. Rubber Bandman is moving. Okay, let me clear this stuff now. So I want you to imagine how Mr. Rubber Bandman is moving. You understand? So like if it's going up, if Mr. Rubber Bandman is going up, okay, he has a rubber band on his, so which is no matter how long he stretches, you understand, he must always come back to gather strength before he continues. So if he's going up, he would make a high, okay, then he would make a low, he would make a high that is higher than the previous high, okay, then he would make another low. That low cannot be lower than this one, so it means that low, it would be higher than the first low, okay, then he would gather momentum again, make a high that is higher than the previous high, then he will rest, he will take a breath, and then boom, he gathers strength again, then make a high that is higher than the previous high. You understand? So, and then when Mr. Rubber Bandman, when he's coming downward, this is what you'll see him do. Now, first of all, he takes a nosedive, then he challenges himself, thinking he can regain his lost glory. Then he crashed further downwards, so making a low that is lower than the former low, and then he will challenge himself again. Let's see if he can break this point, but he'll discover he cannot. So he'll make a high that is lower than the previous high, so a lower high, then boom, he would make a new low that is lower than this previous low, then make another high that is lower than the previous high. So Mr. Rubber Bandman, when you see him coming downward, when he's losing petrol, when his brake is failing, you will see him falling on a slope. You understand? The slope is not going to be as smooth as I'm saying now when you begin to read it on the chart. But when I begin to show us now, you will understand. Yeah, I'm sure you'll be like, okay, so this is what is happening. You understand? So and when Mr. Rubber Bandman is going up, you'll see him, climbing up, like he's climbing a stairs. You understand? He's climbing a stairs. Okay. And when you see him coming down, you'll see him like he's swinging, like there is a tree, okay, upward, and he's holding it and he's swinging down. Okay, so this is how the price moves, guys. So by tomorrow, we shall be doing the chart work. Okay, so this is what I want you to understand for tonight. Okay, so I want an assignment from every one of us, please. So when you go home now, sorry, after these lectures now, I want you to, whether it's a sheet of paper or anyhow you can do it. So, but make sure it's a white platform. So whether a sheet of paper, you do it and snap it anyhow, it's okay. So I want you to label, so draw, okay, draw the movement of a market, of a downward market structures, okay, and label it. You understand? And also the movement of an upward market structures and label it. Please let it be submitted before our lectures tomorrow. You understand? So it would, if we can go through this assignment, believe it would enhance our understanding. Okay. So good night, guys. Great to have us on the webinar again. So by God's grace, we presumed and you know, so we presumed and we will be holding classes every day from today by God's grace.
Thank you very much.
So like do you have any question? Is there anyone that is not clear? So let me answer, let me clear your questions before we call it tonight. So is there anyone that is not clear? You don't understand how to identify a rubber band man? You know, when there is a rubber on his waist, you know what he's doing, how he stretches, regain his strength, comes back, and all those. So if you don't understand, yeah, so let me know so that I would go through it again. Okay.
Please, I don't understand though. You know me, I joined halfway.
Okay. Okay. So now,
Can you hear me?
yes, I had you. I had you, man.
Okay.
All right. Now, what about your? Did you understand this diagram that we explained?
I don't really understand it.
Okay.
But me, I was thinking maybe if you send a video, I will just go through it again.
Okay.
But if you can take your time to explain to me, no problem.
Yeah, I will explain it. So before you go through the video. Now, what we were explaining before you came, okay, is how to read the market. And like we've had some talks already, so you will hear them in the video. Like if you can understand this, Ms. Toyin, like 50% of your work as a trader is done, or 40%. You understand? The reason, I know sometimes traders would be wondering, should I be buying? Should I be selling? Okay, what if I start buying and the market start moving against me? You understand? Or if I start selling and every time I open a sell position, I've had students tells me, okay, whenever I open a buy position, the market will start selling against me. Or whenever I open a sell position, it will start buying against me. So sometimes they are confused. So what should I be doing? That is the reason why we are holding this webinar. You understand? So this stuff we are learning now is how the market moves. So it means whenever you see doing this stuff we are talking about in this diagram, so it means in an upward market, it would be making a high, a low, then another high that is higher than the previous high. Okay, a higher high, and then a higher low. So it means this low this time around is higher, it's on a higher level, okay, than the previous one. And then the next one, you will see that the market would make another high that is higher than this previous high, okay? So we call it a higher high. Then you will see that this same market, the price would make a low, okay, that is higher than this previous low here, okay? So we call it a higher low, okay? So whenever you see price doing like that, it means the price is buying, and the only thing you should be thinking of doing is to buy, okay? And then on the contrary, whenever you see the market doing this, okay, so it means it makes a low. Don't worry, by the time we start going through the chart, you will understand what these lows and high means,